So you're thinking about getting into crypto for the long haul. That's great, but to do it right, you absolutely need a plan. Today, that's exactly what we're going to do. Build a plan together that's focused on sustainable wealth, not chasing short-term hype.
Look, if the whole crypto market feels a bit, overwhelming, you are definitely not alone. There's constant news, thousands of different tokens, it's a lot to process. But here's the thing, you don't need to be an expert to start investing wisely. You just need a solid plan.
And that's exactly what we're here for. We're going to create a simple, structured approach to all of this. We'll focus on the fundamentals. You know, how to keep your investments safe, how to do your own research, and most importantly, how to get in that long-term investor mindset.
Okay, let's dive in. Here's our roadmap for today. We're going to start with your big picture strategy. Then we'll get to know the major players in the market. After that, we'll cover how to research them, build a sample portfolio, and we'll wrap up with the disciplined habits that really lead to success. First up, your long-term crypto plan. I want you to think about this like you're building a house. You wouldn't just start with the roof, right? Of course not. You'd start by pouring a strong, solid foundation. Well, your investment strategy needs that exact same level of careful planning.
Inside your portfolio, you basically have assets doing two different jobs. On one side, you have your volatile growth assets. These are your Bitcoins, your Solanas. They can have some pretty significant price swings, but the goal is long-term growth. On the other side, you've got stability tools like USDC. These are pegged to the US dollar, so their only job is to protect your capital and reduce your risk. A really smart portfolio has a healthy balance of both.
So with that framework in mind, let's actually look at the assets themselves. Section 2, understanding the market leaders. To build a strong portfolio, you first need to know who the biggest players are that are shaping the market.
What you're looking at here is a snapshot of the top 10 cryptos as of April 2026. They're ranked by market cap, which is just a fancy term for the total value of all of an asset's coins in circulation. Just think of it as a quick way to gauge an asset's size and stability. A bigger market cap usually means it's more established and often a little less volatile.
Now from that list, the top two, Bitcoin and Ethereum, are really what you'd call the blue chips of crypto. Bitcoin is the original. It's often seen as digital gold, and it's attracting huge institutional money through things like ETFs. And then there's Ethereum, which is basically the foundational layer for almost all of Web3, powering everything from DeFi to NFTs. For most people, these two are the cornerstones.
And now for the other part of the equation, your safety net. This is where stablecoins like USDC and USDT are so important. They are pegged one-to-one with the US dollar, so their job isn't to grow in value, it's to protect your capital when the market gets rocky. And since their entire value is based on trust, seeing that they undergo regular financial audits is absolutely non-negotiable.
Okay, so now we know what the big players are. Let's dig into the why. This brings us to Section 3, how to research fundamentals. See, a long-term investor learns to look past today's price and tries to understand what's going to create real value tomorrow.
One of the most important signs of a healthy project is something called a protocol upgrade. Now, don't let the jargon intimidate you. It's not like a simple app update on your phone. It's more like a city upgrading its entire highway system to be faster, more secure, and handle way more traffic. For a long-term investor, seeing these upgrades is a critical sign that a project is healthy and evolving.
And here are two perfect examples. Solana's upcoming Alpenglow upgrade is all about making transactions faster and more efficient. Meanwhile, Cardano's Leos upgrade is designed to massively increase how much the network can handle. The key takeaway is simple. When you see a project that is actively building and improving its technology, that's a really powerful signal about its long-term potential.
But great tech isn't enough. You also need to look for real-world adoption. Are regulators giving it a thumbs up? Because clear rules, like we saw with the Bitcoin ETFs, reduce uncertainty for everyone. Is big money from institutions flowing in? And maybe, most importantly, is it actually being used to solve a real problem? A project with a real use case is a project that's built to last.
Okay, theory time is over. Let's put this knowledge into action. Section 4, building your first portfolio. We're going to walk through the practical steps of how to make your first investment safely and with confidence.
Making that first purchase can feel intimidating, but it really boils down to 3 simple steps. First, and this is absolutely crucial for safety, choose a regulated exchange. Second, you'll complete a quick identity check, which is usually called KYC. And finally, you just add your funds and make your first purchase. It's really that straightforward.
So, what could this all look like when you put it together? Well, here's a sample portfolio for a more conservative beginner.
Notice how a whopping 70% is in the two big ones, Bitcoin and Ethereum. That's your foundation. Then you have 15% in stablecoins for that safety net, and the last 15% is for some carefully researched growth assets, like a Solana or Cardano.
Now, if you're feeling a little extra cautious, here's a great tip. You might want to start with tokens that have a lower price per coin but still have strong fundamentals, something like Cardano or Tron. For a lot of people just starting out, it can feel like a much more manageable entry point.
We are on the home stretch now. Section 5, Investing with Discipline. You know, buying crypto is actually the easy part. The real work is in developing the habits and the mindset that lead to long-term success.
The single most powerful tool for a long-term investor is something called dollar cost averaging, or DCA. It's super simple. It just means you invest a fixed amount of money, say $50 or $100, on a regular schedule, like every month. And you do it no matter what the price is. Why? Because it takes emotion completely out of the equation, and it smooths out your average purchase price over time.
And this chart shows you exactly why that works so well. In month 2, when the price of Bitcoin is lower, your $100 automatically buys you more of it. In month 3, when the price is higher, it buys you less. Over time, you automatically buy more when prices are low and less when they're high, which averages out your cost and saves you the stress of trying to time the market.
And that really gets to the heart of the matter. Success in this space isn't about frantically trading based on every news headline. It's about having a plan that's built on solid research and then having the patience and discipline to stick to it, especially when the market gets a little turbulent.
And as you grow your portfolio over time, just use this simple 3-step checklist before buying anything new. 1. What's its regulatory status? 2. Is it available on major compliant exchanges? And 3. Has it been audited? This little filter will help you steer clear of most of the risky projects and stick to high-quality investments.
So let's bring it all home. The goal here is not to time the market perfectly. That's a fool's game. The real goal is to slowly and steadily build a diversified portfolio of high-quality assets and then have the discipline to hold on for the long term. That is the proven path to building sustainable wealth.
We've covered the why, the what, and the how. You now have a clear framework, a real plan for how to get started. So the only question left to answer is, what will be the first cornerstone you lay for your own digital portfolio?
Thank you for watching this video. Please subscribe this channel.